It's the weekend, and you have financial questions that need answering. That can only mean one thing. It's time for Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Oh, welcome to Jill on Money. It's the correction edition. We are sponsored by the letter V, that is for volatility, and we are delighted that you're joining us. Did you get nervous this past week? Did you make yourself nuts? No need. No need. We're here to hold your hand. Relax. Our phone number, 855-411-JILL. Our email address is askjill@jillonmoney.com. All right, gang. You got all nervous. You freaked yourself out. What is the cause of this sell-off that you're asking about? It started with the release of the January jobs report. On that Friday, the first Friday in February, we found out that the economy added 200,000 jobs. The unemployment rate remained at a 17-year low of 4.1%. But notably, hourly wages jumped by 2.9% from the prior year. That's what everyone was focused on. Why? Because if wages are rising more quickly than anticipated, maybe that means we could see a little inflation cooking up. If you see a little inflation cooking up, you know what happens? The Fed's got to move to raise rates to stop prices from rising, to kind of keep inflation in check. If the Fed raises interest rates faster than currently anticipated, right now we're expecting 3/4 point increases in 2018. Maybe there'll be 4, maybe there'll be 5, maybe there'll be 3 and they'll be bigger. Who knows? If the Fed raises interest rates faster than expected, that could be bad for companies. Why? They would no longer be able to borrow money so cheaply. But more importantly, if you're an investor and interest rates are rising, what that means is the cash flow that you could potentially receive from stocks, the equation that you run through your head, the little calculation, what is the present value of future cash flow? Mark, you know how to do that now. Mark is taking the CFP classes. He's done with how many? 2 more to go. So 5 down, 2 to go. All right. So when you don't even know this, when you buy a mutual fund, you don't think about this. But the real calculation is when you buy a stock, you are betting on a company's future stream of income, their future stream of earnings. And those earnings are worth a certain amount today, and they're worth less if you have an implied higher interest rate. Okay? I don't talk about this on TV. You know why? Because in a minute and a half, and you should watch my TV segments from the week because I was on a bunch, but in a minute and a half, it is incredibly difficult to give you this explanation. That's why you're listening to the radio show. That's why. Okay, so if you know that you have just a little bit less money coming in, that because of interest rates, the present value of future cash flow is lower, that would mean the value of the company's share price needs to come down. And there it is. That is the moment that investors start to recalibrate what they think stocks are worth. And that happened on the first Friday in February. And we had a drop in the market. And we finished a week down 4% or so. And it was the worst week in 2 years. And then Monday comes and we have a drop of 1,175 points in the Dow Jones Industrial Average. And everyone's hair goes on fire. Blah! Mark, we need some sort of like scary sounder, something that we put in there. I don't know, a bell like wah wah, like the sad trombone. That's what we need. Look that one up. He's looking it up right now. I can see. So after Monday, when we had an 1,175 point drop, which was, it was the worst point drop in the history of the Dow. But a bunch of numbskulls kept saying, worst day for the Dow in history. That is not actually telling you the whole story. It was not the worst day. It was the worst point loss. Who cares about point loss? The only reason you care about point loss is, honestly, if you are trying to make a football spread. Congratulations to the Philadelphia Eagles. The more important metric to measure how bad a drop it is or was is to use a percentage loss. And on Monday, the Dow Jones Industrial Average fell by 4.6%. A bad day, no doubt. About the 25th worst day in the history of the Dow Jones Industrial Average. If you remember, way back when in 1987, that was the worst point drop, 22.6%. Yeah, that would be like about 5,500 Dow points. All right, whatever. The market starts churning around. People are going nuts, and selling begets selling. We used to call it program trading, computer trading, algorithmic trading, whatever. Stocks keep going down. Then they go up, they go down, they go up. Okay, so what do you do? If you're a long-term investor, you know that you got to do a whole lot of nothing. And I mean nothing. If you have a game plan, stick to the game plan. All right? Because you're not timing the market. No one's timing the market. Why do we think we can do this? You can't. Timing the market requires two precise decisions. When to get out, and maybe you'll get out in time, but you ain't getting back in. That's what we know. History tells us market timing doesn't work over the long term. It's an amazing thing. It doesn't work. However, let's say you need money that's in an investment account. You need it within the next year, and you, actually had too much risk. You had money at risk that you knew you were going to need within a year. You hear us talk about this all the time. People say, well, I want to put my money to work. I don't want to have money idle. Interest rates are so low. I don't want to have my money in my checking or my savings or money market account. It's getting nothing. Uh-huh. Well, if you need your money for a house down payment, a car purchase, maybe you've got to write a tuition bill, regardless of what's going on in the market this second, you got to get that money out. You cannot have money that you need to access within the next year at risk. You can't. So let's not make this mistake. Correct that mistake. Is that enough of a rant for you, Mark? Wow. All right. If you're really worried, we've got help for you. Okay. Go to JillOnMoney.com. JillOnMoney.com. We have a great blog post that I put together because I have been responsive to you guys. And the response that I'm having is people saying, what should I do? What should I do? What should I do? The market's cratering. What should I do? Read this. Go to JillOnMoney.com and read our post. It's so easy. Just go to JillOnMoney.com. Click the read part, and you will see stock market plunge. What to do? Amazing. Just like that. Don't worry. These things happen. Corrections are normal parts of investing. If you cannot take this kind of move, you need to seriously rethink the way you've been managing your money. Okay. When we return, we'll get back to your questions. It is Jill on Money, and our phone number here is 855-411-JILL, and our email address is askjill@jillonmoney.com. We'll be right back.
Twitter, Instagram, Facebook, YouTube, she's all over the place. Go to JillOnMoney.com to find it all. Now back to the show with Jill Schlesinger.
You're back with Jill on Money. If you've got a financial question, we'd love to hear from you. 855-411-JILL. Or you can send an email. Ask Jill at JillOnMoney.com. You know what I wanted to talk about just quickly before we get to this caller, and I know we'll get to it right away, but we did have this past week the beginning of a new era on the Federal Reserve Board. Governor Jerome Powell takes over from Janet Yellen. You may recall that President Trump decided not to keep Janet Yellen on for a second 4-year term as Fed chair. And so she resigned. And right now we've got Jerome Powell, he's the chair. Randy Quarles, he's also the an appointee by President Trump. We have Governor Lael Brainerd. She's was an Obama person, I'm pretty sure. Yes. And she's on till January 2026. And then check this out. There are 4 vacancies on the Federal Reserve Board. So there are 7 positions. These are 14-year appointments. And 4 open positions. It's kind of amazing. Right now, we know that the president is nominated, I think, Marvin Goodfriend to the board. He's pending confirmation. But that's amazing. So we'll see what happens. The Federal Reserve could change pretty dramatically in its composition. I think Jerome Powell was a voting member, so I think it's most likely that he would kind of go along with the Yellen approach, but things could change. Stay tuned to this space. We're going to have a Federal Reserve expert on in about a month or so just to see how things have shaken out. All right, let's go take a call. Dee is on the line from Seattle. And Dee, you listen to us on one of our favorite stations, Cairo FM. How are you today?
I'm fabulous. And you today?
I'm great. What can I do for you, ma'am?
Well, first of all, thank you for taking my question on my quick dilemma. So much has changed since we sent the email.
Okay, tell me.
My husband and I, we have about $1 million in stocks in the S&P.
Mm-hmm.
We have 500 in a money market. We have 500,000 in a money market, 100,000 in CDs. We have about $1 million in real estate, and we have been talking to our financial consultant, and she has recommended to take the 500,000 from the money market and put it into a managed bond fund.
Mm-hmm.
We're pretty light in bonds. Mm-hmm. We realize that. But as of last Sunday, it wasn't our intention to get into bonds, and now the market's just gone like all crazy.
Yeah. I like that. That's the absolute best way to describe it. The market's gone all crazy. So the $1 million in stocks, is that in individual stocks or is that in index funds? What's the nature of the stock position?
Some of it is individual stocks, mm-hmm. and some of it is in index funds.
Okay. And you guys manage that yourselves, or is this person, this financial consultant, does that person manage it for you?
So we manage all of our own individual stocks.
Okay.
And my husband has been using money from the $500,000 that's in the money market mm-hmm. to buy the stocks. And he is a huge believer in, oh, my God, this is the time to really look for some good deals out there.
Oh.
There's good deals left and right. There's got to be a few out here. Let's find them. But if we tie that money up into this managed bond fund,
mm-hmm.
that's not going to be available to us.
Yeah.
We're recently retired, both of us.
Yeah.
Early 60s. So it's not like, well, we can still be doing the 401k, 403b. Those are gone now. So mm-hmm. now it's figure it out.
So let me ask you a question, Dee. Okay. How are you guys supporting yourself?
We have a small business of which we make about $50,000 a year,
mm-hmm.
and to be honest, we're probably not the world's best consumers.
Mm-hmm.
We're better savers than consumers.
That's okay. We love good savers. This is a program that loves a good saver. Is the $50,000 a year all you need to live on?
Well, we could probably do it on that, although it would be nice to have a little bit more than that. Mm-hmm. And neither one of us are drawing Social Security at this point in time either. So,
when do you think you might want to draw Social Security? Because you are in your early 60s. So what's your full retirement age? 66, 7?
Probably about 67, 68.
Mm-hmm.
We've kind of been playing around with some of those numbers. The financial consultant says that, the rate we're going right now, before Crazy Town, we wouldn't even have to really worry too much about pulling anything.
Oh, that's good.
So we're completely free to do whatever's going to work best for us.
So what is it about? I'm just intrigued because presumably what I think is happening here is that you've saved a bunch of money. You've got this small business. When you ever decide to take your retirement benefits from Social Security, that you've got plenty of money. You're not going to run out of money. So tell me about your husband's desire to find these great deals, and what is it that, since you don't spend a ton of money, do you want to leave a bunch of money to kids? Like what's the motivation?
I think that being children of Depression era parents, it was really important, especially to his family, to save, to work towards a future and a retirement. His mother passed early, and his father recently passed. So he just wants to make sure that we are secure no matter what happens. And we do have, 2 children and a grandchild at this point. So leaving it to them is not a problem to us. We are looking at, doing things for us, doing some traveling and da-da-da. But, it's just we've never been these huge consumers.
Yeah, I get that. If you're not a huge consumer, I'm not particularly clear as to why your husband seems like he wants to, except for the fun of it, of getting in on it. And you've already got $1 million invested in the stock market. I think that's plenty, given your kind of where you stand. I don't think it's a terrible idea to actually have a good chunk in bonds. I don't know whether you need to be in a managed bond portfolio. I mean, you don't have state income tax in Washington State, correct?
No,
okay.
We don't
so
have
you
it.
don't have to worry about buying some individual bonds that are, essentially, tax free. You'd be buying some types of bonds, maybe some blended types of bonds. Why wouldn't you just buy? Even if you just said, let's take some of the money and start buying an index bond fund, with a couple of different flavors of that and call it a day, which would cost you a fraction of what you would pay in a managed account. I think that might be more interesting. And I guess the other piece of this is that I am going to caution you about that you don't really need to take on more risk. I would say to your husband, like, look, honey, we're in great shape. Why are we rocking the boat? Let's just stick to our game plan. Let's get some of this money that's in the money market account invested. Let's buy a bond fund or 2 or 3 and call it a day. And if he really wants to play, he's got plenty to play with. He's got $1 million at risk. So that's my advice, Dee. Thank you so much for calling. You're listening to Jill on Money. 855-411-JILL, or send us an email. Ask Jill at jillonmoney.com.
Do I invest here? Should I put my money there? Jill Schlesinger can help you. Back to Jill on Money.
You're back with Jill on Money. If you've got a financial question, we'd love to hear from you. Our phone number here is 855-411-JILL. Send an email, ask Jill at jillonmoney.com. Okay, so just get that question from Dee in Seattle about putting money into the bond market. And we also got an email from somebody who listened to our episode with Justin Land, the Bond Boot Camp. So let's follow up on that, which is, hello, Jill. The Bond Boot Camp was a good and timely topic, especially as equities were running up. That was when they were running up. That was when everybody was like, oh, equities are going to be everything. That's the most important place for me to be, in the stock market. I don't want to own a bond because bonds, no, I don't want to own a bond because they're boring. And then you get some horribly crazy market movement, and then bonds are a little less boring, right? Look, what I think is very clear is that you guys know that I am a huge advocate of a diversified portfolio. So, the good news with a diversified portfolio is you don't have to pick the top or the bottom. You simply have to be very clear about what your goals and objectives are. And if you're clear about that, well, you may not have to worry about the direction so much. So I think that that's something that's very important to remember, okay? Now, here's the question that we get, and that is, I have a significant position in bonds through a multi-sector bond fund, and the symbol is PONDX, which is the PIMCO Income Fund. PIMCO is a big bond house. You may have heard of that. I'm in early retirement. My wife still works full-time, and this seems to have had a pretty good return year after year versus other funds, including exchange-traded funds, individual bonds, although I'm not too crazy about the expense ratio of 0.9%. What do you think about PONDX? Is there a better alternative? Thank you. Look, there's always alternatives to this. If I pull up the summary for this fund, what you find out is that, it's doing okay, right? It's like you said, a multi-sector bond fund. It is a highly rated fund by Morningstar, which I don't know, I don't care that much about. It does have a pretty high expense ratio. It does turn over a lot. I don't know if you hold this in your retirement account or not. But it has been a good performer over time. I think that for someone in your situation, if you're just owning a couple of funds, it's not bad. It does pretty well. You could alternatively use a couple of bond index funds if you want to do that. Maybe that's something like the Vanguard Intermediate Term Corporate Bond Index. But on some level, I guess I wonder why we should actually rock the boat. I don't know if you have so much money. If all this money is in a retirement account and you want to diversify, you could sell some of this off and you can buy a plain old bond index. If you want to sprinkle in some other bond index funds, maybe a high yield bond index, I'm not a huge fan of that. I'd rather you just keep it simple. Or maybe an international bond index. That might be something to consider as well. In any event, what I would say to you is I'm glad that you actually have a bond fund. I'm glad that you are thinking that you're going to stick with a bond position. I'm glad that you're not freaking out one way or the other about all the different movements in the marketplace. And for everyone listening, bonds can be a very nice part of a game plan. They can be a much easier way for you to manage your risk. Hey, Mark, can I do the email of the guy who was supposed to call in? All right, let me finish this segment up with this. Brandon wrote that he's turning 30 and his parents are pressuring him to buy a house. Given that the housing market's doing so well right now, Given that the stock market is doing so well right now, I don't know how long the bull's going to last. Is this a good time to take money out and invest in real estate? That's the question. Of course, the market actually crashed in between the time I received the email and I'm actually talking to him. Here's the deal, okay? If he would be thinking about buying rental property, I just don't understand why you would want to be managing rental property right this second. You're 30 years old. They're going to do it. I don't care. I just think that buy a house when you're ready to buy a house. Don't buy a house because you think it's some fabulous investment. And by the way, prices are up. So I think you're better off Just doing what you're doing, Brandon. Don't overthink this too much. And know that in any market where you think you're getting a great deal, it's probably not as great a deal as you think. And, it costs money to operate a rental property. What would you do if you needed your money for your own house? How are you going to manage that process? All these things are important questions to ask yourself. So let's chill out. And parents, don't be pressuring your kids into buying something. They don't need to do that. Absolutely not. Just let it be. How about the parents? They want to buy rental property so badly. Buy rental property yourself. Use your own money. Right, Chester? My friend Chester's in the house. You'll hear about him. He's the man. He'll be on in a future show. We're going to record some interviews this morning. And you are going to tell us what's on your mind. And remember, if you like to get in touch with us, there's a couple of different ways to do that. Our phone number is 855-411-JILL, 855-411-JILL. Our email address is askjill@jillonmoney.com. And if you get a chance, maybe during this break right now, hop on to our website, jillonmoney.com. That's jillonmoney.com. Mark and the Mad Russian have made it look so beautiful. Also, Mark, the picture you picked for the front door, purple. It's like it's the color of the year in 2018. So you were very prescient in doing that. Tell me if you know who the guest star is on the front door of the website. If you do, you'll get a prize. I don't know what that prize is. Anyway, it's Jill on Money. We'll be right back.
Eight 855-411-JILL. That's the number to call to have your financial questions answered. Back to Jill on Money with Jill Schlesinger.
You're back with the program that takes the mystery out of your financial life. I am Jill Schlesinger, your host, your hostess with the most S. And Mark's running the show. Back there. Very tan today, Mark. You're very brown. You're in the brown family. I'm just pointing that out for no particular reason except to say that you're in the browns. If you've got a financial question, we would love to hear from you. Our phone number is 855-411-JILL, and our email address is askjill@jillonmoney.com. Here is a note from Laura, who says, Jill, I enjoy watching you on CBS This Morning! Exclamation point. See, let me read that with more feeling. I enjoy watching you on CBS This Morning! That's how I hope she would say it. My question, comment, why is no one talking about the demise of the personal exemption with the new tax plan? I agree. Let me just editorialize. I talked about that in the beginning, and then no one else is talking about it. And I got smacked down because people said, oh, well, not that many people are really going to be hurt by the loss of the personal exemptions, and don't dwell on it. And I agree, Laura. And here's Laura's particular situation. Because remember, part of the near doubling of the standard deduction meant that they also said we're getting rid of personal exemptions. So in Laura's case, she and her husband have 3 kids. They've always itemized. So again, if you itemize, you got to then claim these things called personal exemptions. I think $4,050 per. Double check that, Mark. I think it was something like just over $4,000 for a personal exemption. And so in Laura's case, she had the 3 kids, she and her husband. So 5 times the personal exemption amount. I think it's $4,050. And she said, and between that and, yeah, right, I remembered that. The child tax, so it is $4,050. And Laura's is between the personal exemption, $4,050 times 5, and the child tax credit. She said, we got the best tax break. Now we're going to lose out, I think, because without those personal exemptions. And she says the doubling of the standard deduction doesn't come close to making up the difference. And and because of what we itemize, this is fascinating. We are not going to be able to take the standard deduction. Sounds like she's in the sliver of people who are annoyingly close. We're trying to figure out what our next move should be. Your thoughts. By the way, we generally get a pretty good refund, $2,000 to $4,000 on average. I know, interest-free loan to the government and all. We're just good. We aren't good savers, and we don't want to owe money at the end of the year. Well, let me ask you something, Laura. Have you been able to max out your retirement accounts? Have you been able to do that? Because that's one way that you can reduce your tax liability. So if you're not maxing out your retirement accounts, maybe that's a way to not only save for the future, but also essentially to lower your tax bill. And in terms of that tax deduction, maybe what you're going to find is that if you lower your take home, you might need some of that money, I know, but like you'd want to increase the, kind of tinker a little bit with your W-4 and make sure that your cash flow can cover your needs. But I think that that's kind of what I'm thinking. That's where I want to go. I think you want to be making this a much cleaner way to save money. So that's what I would do. Okay. Here's another question from Althea. My 14-year-old is a saver. Where would you suggest she put her money? Regular savings account, money market account, mutual fund account? Depends what she's saving for, but, I would think maybe a savings account or a money market account so that she could kind of get used to this idea of checking in on the account and making sure there's enough money. That said, how great to have a wonderful saver. Put her in touch with that money. Make sure that she understands what saving is all about. Teach her the basics. I think that that's what I would say is your best bet. All right? I love good savers. 14-year-old who's a good saver is someone that, you want to keep encouraging that. And maybe if she starts saving enough, you start to little by little introduce some other concepts. Maybe the concept could be, once we have this much money here, we would put this much money in a college account. Maybe something like that. But I would say keep it liquid. She'll probably want it. 14-year-olds who save. Wonder what the demo looks like for that. Mark did, but he's a freak. Did you have a hobby? What'd you do? What'd you do with all that savings? Yeah, when did you spend it ever? Did you spend it? You spent it on college. Didn't you pay for college yourself? Pretty much. Took some loans, but he paid it back. All right. You're listening to Jill on Money, 855-411-JILL. Our email address is askjill@jillonmoney.com. And if you get a chance, hop onto the website, jillonmoney.com. It's reformatted. It looks beautiful. It's been a great evolution. Mark and the Mad Russian did me up. So check it out, jillonmoney.com. You can listen to past shows. You can read our blog. You can watch videos. Like Laura can go check out some of the maybe past episodes of the program or watch some CTM hits. So check it out, jillonmoney.com. When we return, more of your questions. We'll be right back.
.401ks, IRAs, refinancing, she covers it all. Back to Jill on Money with Jill Schlesinger.
You're back with Jill on Money. If you've got a financial question, we want to hear from you. Ask Jill at jillonmoney.com. Angie writes that she needs advice about student loans. I'm wondering whether I should take money from my savings to pay off a Parent Plus student loan. I'm 69 years old, retired, and a widow. I make enough to cover my living expenses and the student loan payment. The loan balance is $15,000. Can I just say something that's so wild? last year, the Consumer Financial Protection Bureau found that older Americans are the fastest growing segment of student loan borrowers. The CFPB found that about 3 in 4 older borrowers with student loans use them to finance their kids' or their grandkids' college education. And here's the stat for you. The number of Americans age 60 or older with one or more student loans quadrupled from the year 2005 to 2015. The average debt owed by an older borrower, $23,500. Oh, my God. So doesn't that make sense? Okay, Angie, no, don't pay off the loan balance right now. I want you to conserve your liquidity. Angie also goes on to write, I read that if I die before the loan is paid off, it would be automatically discharged. It depends. I think if it's a federal loan, yes, but it really depends. If if it is a private loan, no. If it's a loan through certain states, maybe not. You're going to have to read the fine print. But I think keep doing what you're doing. Don't deplete savings. And maybe is the kid who got this education available to help you out? Because that may actually be the way to do it. Parents, stop doing this. Stop assuming so much debt for your kids. I know you want them to have a great education. 69 years old paying off a student loan debt. Mark. It will not be you and it will not be me. Mostly because I don't have kids. All right. You are listening to Jill on Money. 855-411-JILL. Send us an email. Ask Jill at jillonmoney.com. We'll be right back.
It's the weekend, and that can only mean one thing. You're listening to Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
All right, it's hour number 2 of Jill on Money. Well, maybe you were never tempted to buy into this idea that the bubble was forming in stocks, and maybe you just were looking at something more exciting than the stock market. Maybe you were tempted to buy into the cryptocurrency craze. Well, I like that, cryptocurrency craze. The 3 C's, Mark. Well, if that's the case, it has been quite a wild ride. Forget the stock market for a second. Yeah, I know. 1,000 points up, 1,000 points down. Okay. But Bitcoin, one of the major cryptocurrencies, just had a week that mind-boggling. Bitcoin down about 70% from its December high. 7-0, ladies and gentlemen. So we have, by the way, Mark, notice that we've stopped getting a lot of Bitcoin inquiries lately. But I did want to get you caught up on what this is all about, because it's not just about this thing called Bitcoin. It is about the technology that is behind all of these cryptocurrencies. And so to help explain it, we've got a great guest, Dan Roberts. He's senior writer for Yahoo Finance, and he's amazing. So here's our interview with Dan Roberts. So before we start, best financial decision you've ever made?
Wow. Oh, that's a good one.
Thank you.
I would say saving money most summers that I worked in college.
Oh.
Just not touching it.
What'd you do?
A number of things. Summer camps, teaching tennis. I was a tennis instructor a number of summers.
Wait a minute. You're a good tennis player?
Yeah, I'm all right.
And where did you save it? Just in a savings account?
Yeah, savings account. Going back to school, I tried to leave those funds alone, not touch them. 3-4 summers worth of pay from summer jobs, just left alone, didn't touch.
All right. Tell us a little bit about your career, because you spent 5 years at Fortune. You're now at Yahoo Finance. Your main job is sports business writer. That's how you sort of came into Yahoo Finance. Is that right?
Yeah, I would say in the last year, though, that crypto has become as big a beat. which I saw coming. Let's see, I started writing about Bitcoin back at Fortune in 2011, nice and early. And as we know, the technology came along in 2009. Now, I would say that it's still early. It may not feel that way because everyone has discovered it and is on it and mainstream media is freaking out, but it's still early days for this technology. It's a nascent technology. People say, oh, where's it going? It hasn't yet created a killer app. Well, give it time. But yeah, I was a sports business guy at Fortune. That was my main thing, sports and money. And that alone has become such a big beat. That is a full-time beat. So many things fall under sports business. That's new stadiums being financed. That's player endorsement deals, athlete scandals where they lose their endorsement deals. That's ESPN and its ownership by Disney and various layoffs and moves that company makes. So it's media, it's television, it's streaming media. But then also I became interested in Bitcoin and cryptocurrencies. And I would say that in the last 2 months, which makes sense because the market has gone nuts, I've probably written more crypto stories than I have sports business stories.
Can we just go back? We had a couple of listener questions that we answered about Bitcoin, which then prompted more questions. So I thought, why should I just blather on about this? Why not get an expert? You're my expert. I want you to try to do is explain in plain English for those folks who hear about Bitcoin but don't understand it. What is this? And then we'll go into the technology behind it. So what is Bitcoin?
In the simplest sense, it was created as an online payments platform, a way to pay people with less friction. So send money faster and more cheaply. So let's say you have a friend in Africa and they urgently need money, or maybe it's your son or nephew or a relative. In the old days, so to speak, but as we know, this is still the way many people would do it, you'd go to Western Union or any other money transfer business. Usually you would go up to a physical window and you would do a money order and it would take 3 or 4 days. That's the transfer delay. And you'd pay a fee, a significant fee. The proposition value of Bitcoin is very small fee, instant or close to instant transfer time. So the person in Africa will get that money in a matter of minutes, not days. That was how it was originally conceived.
In 2008-9.
2009, yeah, with a white paper, and as we know, created by someone using the pseudonym Satoshi Nakamoto. But now, in the intervening years, the use case has really changed. And for the most part, people jumping into Bitcoin and other cryptocurrencies are just using it as a speculative investment. They're buying and holding because they think it will go up.
Okay, but let's go back to Bitcoin for a second. So you have a fabulous article on Yahoo, which we will link to because I love it. It is the article that is entitled The Biggest Misconceptions About Bitcoin.
Yep.
Obviously, there are a lot of things that are floating around. So we're going to talk about cryptocurrencies. When we talk about it, we're going to talk about Bitcoin, Litecoin, Ether, and Ripple. And more. Okay.
I'd call those the big four right now.
Okay. Yep. So when this was created in 2009, the other use case I thought was, all this horrible crap just transpired in the universe, right? With big, huge financial institutions messing with us. And central banks may or may not have intervened. And was that good or bad? I thought that one of the other use rationales behind Bitcoin was there's no central bank behind us. There's no intermediaries. There's no one mucking up the system. Is that true?
Yes. And in fact, there's been an interesting philosophical shift because in those early days, the big Bitcoin believers were mostly libertarians. And you're right. The appeal was it's not fiat currency. It is decentralized. There's no middleman or intermediary. It's outside government control. Now, that's not the same as unregulated. There are some forms of regulation. But for the most part, it is separate from the mainstream economy. And in fact, I don't know if this is what you were getting at, but also seen as a hedge during times when the local national currency is failing. So Venezuela, Greece during the Greek banking freeze.
Zimbabwe.
We saw people buying Bitcoin as a hedge, as a store of value.
And part of that also led to more nefarious uses where early on we heard stories about, this is where you can use your Bitcoin, you can buy drugs and you can launder money. Has that stopped in general now, or is that still going on?
That hasn't stopped. I would say that one fair retort that I've heard is, look, you can use cash for crime too. And in fact, cash is the chosen currency of drug deals because it's untraceable, it's cash. So yes, Bitcoin, because it is semi-anonymous, because it is outside of government control, because it's non-fiat, because it's peer-to-peer and decentralized, it became a popular route on illicit marketplaces. We all know the Silk Road story. That was a very high-profile case, very bad for Bitcoin. And for a while, all of these headlines, we call this bad for Bitcoin. You know, there were different hacks of major exchanges. Mt. Gox crashed because it was hacked. So yes, all of that is true. But I like to say, look, technology is agnostic. You could use technology to buy drugs or buy weapons, God forbid, but it's also still a popular currency among terrorist groups. But you can also use technology to give to charity. Some people want to give charitable donations anonymously, and Bitcoin is good for that.
We'll be back in just a second to continue our conversation about the world of cryptocurrencies. So exciting. Hang on. Dan Roberts from Yahoo Finance coming right back. You're listening to Jill on Money. 855-411-JILL, or send us an email, askjill@jillonmoney.com. We'll be right back.
Twitter, Instagram, Facebook, YouTube, she's all over the place. Go to JillOnMoney.com to find it all. Now back to the show with Jill Schlesinger.
You're back with Jill on Money, and it seems like the word, you know what, this show is sponsored by the letter V. Remember that? Wasn't that on Sesame Street? Was that Sesame Street or Electric Company? They would say, this show, this is sponsored by the letter something. V is for volatility. And volatility can be found, obviously, this week. We found out, hello, in the stock market. But how about in the cryptocurrency market, where prices are flying up and down and all over the place? Price of Bitcoin fell below 6,000 for the first time after being up at 19,000 back in December. And, the rise of this one of the many cryptocurrencies really caught the attention of ordinary Americans because it was just going on this tear. And what is probably less reported but more important is not the rise of the currency value or the crash of the currency value. It is, in fact, the technology behind these cryptocurrencies. It's something called blockchain, and it is going to actually be part of your life in the future. You are going to see. The reason why we're talking about it is our guest, who is really been an amazing, prescient commentator about crypto, is really focused on this technology behind it. Dan Roberts, he's a senior writer at Yahoo Finance, and he is going to hopefully explain very calmly about this technology that could change your life. So here's more of our interview with Dan Roberts of Yahoo Finance. Tell me about how it's traceable. I'm intrigued by that. I did not know that.
So the Bitcoin blockchain is the ledger on which all Bitcoin transactions are recorded.
Hang on right now, because everyone who's listening who's not familiar with this is the crux of why you have to care about cryptocurrency. So now, can you explain, Dan, what is it about blockchain that makes this technology so powerful?
Yes. So blockchain is decentralized. So there is not one middleman or arbiter. So when you send money via Chase as an organization is settling that transaction. Chase holds the cards. Chase controls the settlement of that transaction. On the Bitcoin blockchain, transactions are verified by mining blocks of data. Hence, it's called a blockchain. And without getting too technical, miners are people that have big, expensive, heavy machinery that are solving complicated computations to win the right. They're competing. It's a race to upload blocks of data. And those blocks include tons of transactions. It might include your transaction if you pay someone $10 worth of Bitcoin. So those get added to the chain, and it is immutable, permanent. So every transaction done in Bitcoin gets recorded on this blockchain. Immutable, like I said, so it can't be tampered with. Decentralized, so there's not one central power or party. And that's what people like about it. So now you're seeing Wall Street institutions and financial institutions flock to blockchain, but without Bitcoin. That was the narrative in 2017. The hottest hyped narrative of the year was, ooh, we really like blockchain, but not Bitcoin.
Because you imagine that the blockchain, the application, is beyond this thing called the currency itself.
Yes.
The blockchain, that technology can be used obviously in the payments business, but also I understand that IBM for logistics is doing a ton of investment in blockchain or not. You're giving me a little bit of the smirky, sneery thing.
I would say that many of the institutions coming out and saying, ooh, we're doing a pilot program with blockchain, it's all lip service. It's look at us. We want to look like we are caught up in the now. We know what's hip and what's hot, and we're doing it. Yeah, we know about blockchain.
Right.
But it became this buzzword that in many cases was meaningless. I mean, yes, you can use blockchain technology without a cryptocurrency. However, in most cases when banks talk about using it, it's not very sexy. We're talking about speeding up their back-end transaction settlements.
Yeah, but that's kind of like, okay, so
it's important. It's
I was just going to
efficient.
say I'm completely a nerd about
But it's
that.
not, world-changing.
No, it's not world-changing. But, for example, like when I first got into the business of trading, we had T plus 5 days, right? You'd have the transaction, and the transaction would settle in 5 days. And then it's gotten shorter and shorter. But if the blockchain technology can be used to settle trades, then all of a sudden, like, honestly, no one needs a physical floor. Not that anyone needs a physical floor now.
Right.
But then all these big companies can kind of get rid of various middle men or women and essentially drive down the cost of transactions, right? I'm not saying they're going to pass that on to us because they're not. They're going to keep it themselves.
Well,
right?
and you wouldn't need to know anyway whether they're using blockchain. I mean, people compare it to the way email works. You don't understand how it actually works. You just know you click send and it worked.
Yeah, all I care about is whether it's going to reduce the cost of trading. Now, wait a second. Let's get back to my initial question, which was when you were talking about blockchain and you were saying that at every mining computer, every computer that is connected to the blockchain is recording all this information, and the more computers that are involved, the better the system becomes, right?
Well, yes, except that, and this relates to your question about can it revolutionize trading, as activity increases, the Bitcoin blockchain at least has slowed.
Really?
Yes, and Bitcoin's value proposition of, wow, settle a transaction in seconds, it's become minutes, and now it's become, in some cases, over an hour. This is still much faster than traditional 1.0 methods, but it's important that we note that it has slowed. And in fact, mining has become prohibitively expensive for most people. You, a regular person, could order a machine, set it up in your house, and mine, but it's not as profitable anymore because most of the mining is done by these giant mining pools in China. And China wants to ban Bitcoin mining. Now, can they really do that? Mining happens in many cases in people's homes, we'll see. But Bitmain, which is the largest maker of mining equipment in the world and is based in China, it's pretty public. I mean, the buildings are right there. Chinese government officials could come and shut them down. Asia in general, China, South Korea, has a huge impact on the cryptocurrency market from day to day. People forget that.
When someone is out there listening right now who has literally like, this is very fascinating and intriguing, but I'm listening to Jill talk to Dan. I've listened to the episode on Planet Money where the guy lost his Bitcoin and like couldn't find his password, and that's a horrible thing. Yeah. Why should I still pay attention to this? Is this tulip mania? Jamie Dimon has now reversed course. He said, this is a bubble. This is a Ponzi scheme. And as he was building his Bitcoin trading desk, I might add, he now has reversed course. It's maybe I overstated.
So a number of things to unpack there. Yes, the technology and then the price of the asset are really separate issues. And in fact, the price of Bitcoin doesn't need to be high at all. It's kind of irrelevant. I mean, it is being driven up by sentiment. I would say that, like with commodities, and we can argue about what Bitcoin actually is, the price depends on what people think its value is.
Right.
And when sentiment is hot and positive and the headlines are good and things are rosy, the price is going to go up. But there's no reason Bitcoin needs to have a high price. Bitcoin as a currency is kind of a fading notion. In fact, we call them cryptocurrencies, but I like calling them digital assets. I think that's a more apt term. And people define these differently. You were saying that it reminds you of commodity markets. And in fact, the IRS finally in 2014 came out with some guidelines on Bitcoin. They consider it property, which means that unlike with equities, you wouldn't have to do capital gains. The idea that it's a currency, it doesn't really work that well as a currency. No one is buying things in Bitcoin anymore. No one is looking to see where can I spend my Bitcoin, because as the price goes up, you just hold it.
Right. So now it's just a bet.
Yeah. Now, the technology, a lot of people are very bullish on that. That's a separate issue. You, a regular person who's listening to this great show, do you need to worry about how the technology works and the ins and outs of the tech? Not really. Does anyone understand how the internet works? No. They just know that HTTP is the 4 letters that start a URL, and that they type it in, and then they do www, and it works, and it loads.
Right.
So blockchain can function behind the scenes.
We'll get back to our interview with Dan Roberts. It's all things crypto today on the Jill on Money Show. If you've got a financial question, we'd love to hear from you. 855-411-JILL. Send us an email, askjill@jillonmoney.com. Don't forget, if you've missed a previous show, hop onto the website, jillonmoney.com.
If you've missed any part of a show or want to check out a past show, go to jillonmoney.com for more great personal finance content.
You're back with Jill on Money. Have you checked out the new website? Mark and the Mad Russian work so hard on it. Are you happy with it, Mark, or are you still starting to change stuff around? You feel good? He loves it. Check it out, jillonmoney.com. Do you think we should have the Mad Russian in to come and talk? No? He says no. If you've got a question for us, 855-411-JILL. And you can also send us an email, askjill@jillonmoney.com. It looks like we're going to have to do an entire hour of emails because Mark says we are piling up the email requests. So we'll get to that. But if you've written and we haven't written back, we promise to get to you. It's going to happen. It's just, like I said, we're a little backed up. All right. All right. So we are in the middle of our interview with Dan Roberts. He's a senior writer at Yahoo Finance. We're talking cryptocurrencies, and we're talking about them because they're all over the news. This was a huge week for Bitcoin, plummeting. It's now down more than 70% from its recent high. But as we talked about in the last segment, it is a real technology that is backing this craze, this thing called blockchain, a way for really a vast network of computers to kind of create an accounting ledger and pulling out the middleman. So there is something real. I shouldn't say there is something real behind the mania. What we're wondering is from Dan, what are his big fears going forward? Here's more of our interview with Dan Roberts. What is your fear as someone who has really done the deep dive into crypto and digital currencies and what's called digital commodities? How about that? We'll do that. What is your fear about this Bitcoin mania?
Number one fear, and I see it happening, is regular people, some of them might be your listeners, but I hope they'll be smarter, rushing into these coins, putting a lot of money into them. And look, at the end of the day, you should only be investing in something you understand. That's why at Yahoo Finance we've been doing these helpful explainers, and they do very well, by the way, because people are hungry for this information. Very simple. Whenever I tweet them out, of course, the Bitcoin believers, the Bitcoin crazies who've been entrenched in this stuff for years, tweet snarkily, we all know this. It's like, well, the average person doesn't. We do, what is Ether? What is Ripple? What is Litecoin? What is the blockchain? These are questions everyone has, and they should be doing a little bit of homework. And number two, like any other investment, only put into it what you can lose. Don't mortgage the house and put it into Bitcoin. My God. And of course you can say, oh, people aren't doing that. But I'm already hearing stories from friends. I'm 30 years old. I'm hearing from people my age who know people at their office who are asking questions like, where can I buy this stuff with a credit card? Because I don't really have that much money right now to play with, but I want to put a lot of money into it. Oh, boy, does that scare me. That is scary.
Yeah.
And in fact, there's good reason why Coinbase, which is the leading mainstream, easy-to-use option for buying Bitcoin, doesn't let you buy with a credit card. Because God forbid, then you get into debt. Americans over-leveraging themselves is how the crisis happened, we remember.
Yeah, and every crisis, by the way.
Yeah.
Right?
And people should be very, very careful. And I'm nervous that people looked at just the 2-week period that ended 2017 when everything was up. Heady days. Woo! Our Yahoo Finance heat map, where you can see an instant view of the whole market, was all green, baby. And people were buying. Woo! And now it's crashing back down. And by the way, that's still much higher than it was just a year ago. It's still way up in the last year. But people are freaking out. Well, don't bet the farm.
Right. So the only amount of money that you should put in Bitcoin, even if you know nothing about it, just for a flyer, is what you can afford to lose. What is it about crypto that got you so psyched about it? You love sports. You covered the business of sports. You love that. Why did you love this so much?
I think two things. One, the incredible passion of the community. These, I call them for shorthand, Bitcoin believers, true believers, whatever you want to call them. And now it's gone beyond Bitcoin. You know, we can talk about Litecoin. I don't want to bore everyone and get too into the different coins. But unlike Bitcoin, people know who the creator is. It's this guy, Charlie Lee. And the people in the Litecoin community are obsessive. They love him. They retweet him. He's popular on Twitter. And they like that they know who created it. My point is just that it's not just Bitcoin now. It's all these different coins. Each one almost has its own community of believers. People are so obsessive. They're so passionate. The people who are in this world have traded in their regular day jobs at tech companies. Many of them are developers, techies. Now they work at Bitcoin companies. I'm excited for the potential use cases that could impact my industry, media. I look around and I see that digital-only news publications, I work at one, Yahoo, you could rattle them off, everyone is trying to figure out how can we get people to pay for our content? Mm-hmm. Because God knows it costs money to produce great journalism. And it isn't that people aren't reading news. In fact, people are consuming more news than ever. But somewhere along the way, a conversation for another day, people became convinced that they shouldn't have to pay to get news. And that's a shame. So people have tried paywalls with varying success. It has worked for the Times. It has worked for the Journal. It has worked for the FT. But the number of places where it has worked is very small. It's places that are need to read for a large portion of people. So what can we do? Well, if only there were a way to make it frictionless, to instantly pay such a tiny amount of money that it's like an impulse purchase at the checkout aisle, a pack of gum. So let's say we have a deep investigative feature that we promise is great and fascinating. Let's say it's a New Yorker long-form profile of some famous actor, and you want to read it. You don't want to have to enter your whole credit card info. Oh my God, it takes forever. But if only there were a way to push a button and it just charges you 10 cents.
I like
you would
that.
Do it. And Bitcoin has that possibility. There are companies working on this. Frictionless, instant online payments. It doesn't have to be Bitcoin. It could be Litecoin. It could be a different cryptocurrency. It could be a token, and that's the best word to use, that hasn't even come around yet. But that is one use case. People talk about the killer app of Bitcoin. They say, oh, there isn't yet a killer app. And what they mean by that is a mainstream use case that would force the average person to care about this and jump in. This would be a killer app. I'm excited about the use cases for media and publishing.
But you know what's interesting about that? Monetizing content is really hard.
Yeah.
And I think what is fascinating is that I do believe people would pay for content. It's just like I think people pay for financial advice. It has to be good financial advice. It has to be unbiased financial advice. But yeah, there's a great use case. Not everyone wants to do it on their own. Not everybody wants to curate their own content and go like scorch the earth looking for this information. You have just in a very short period of time distilled this topic in a digestible way. And I think that there is great value in that. So I hope you're right. Thanks so much to Dan Roberts. What a great guest. We're going to link to Dan's stuff. Check out the Yahoo Finance Crypto Heat Map. It's a fun thing to throw up on your screen. When we return, we're going to get to more of your questions. 855-411-JILL or send an email. Ask Jill at jillonmoney.com. We'll be right back.
Have a finance question? There are many ways to reach the show. You can call anytime at 855-411-JILL, send an email to askjill@jillonmoney.com, or tweet a question on Twitter using the handle @JillOnMoney. Just use the hashtag AskJill.
You're back with Jill on Money, 855-411-JILL, or you can send us an email, askjill@jillonmoney.com. Mark, do you notice what a good mood I'm in as the market is crapping out? Do you notice that? It's odd, right? I love sell-offs. It makes me feel, it like invigorates me because it reminds me that we are alive and that things don't only go in one direction. And I am so delighted when I get an opportunity to not say I told you so, but to explain the ups, but also the downs. And you know what? You guys pay more attention when markets sell off than when they rise. It's just a fact. It really is. So let's get on with it. We've got some questions here. Joanne, subject, short-term investing. Message, I will be receiving funds from an inheritance in a few weeks. Good timing. I've already received funds in the form of an inherited IRA and other funds. I've invested with Merrill Lynch along with a transfer of 401k funds from a previous job for my retirement. We had to wait for the final rules to be distributed because of estate tax returns, blah, blah, blah. My final amount, $150,000 after tax. I'm almost 63. I'm planning to retire in 3 years. After my retirement, I have plans to buy some property with my only daughter and her husband, and we will all live on the same property. That's so nice. So she's going to need the money in approximately 3 years. What is the best way to invest now until the money is needed? I've already paid off my mortgage from earlier inheritance funds, so in combination of sale of house, this money, and sale of daughter's house, we're hoping to get a home for all of us to live in. Ideas of how to invest knowing that I need the money in 2 to 3 years. Gosh, that is the hardest time horizon for me because it is a short enough time horizon where I say to myself, you cannot go crazy with the risk. It's a long enough time horizon that you don't want to keep the money in cash. So, few choices for you. One is to essentially build a bond ladder. So you keep all the money in interest-bearing bonds, and you buy bonds that are going to mature in a year, 18 months, 2 years, 2.5 years. And you just do that. The other option, you could say, I'm going to keep some money in cash, like I'll keep 50 grand in, a money market account, and I'll keep, say, now of the rest, the 100, maybe I would put 50 grand in a bond fund and 50 grand in a stock fund. I guess that the reality is that because that, it's 2, maybe it's 3, who knows, could it happen in a year? If you think that it's more likely that you're going to buy sooner rather than later, in that case, you really can't take on a lot of risk. So I think err on the side of being risk averse. And that way you can protect yourself. So I think that's kind of the general sense here. Good timing in some respects that you have, correction territory here. But the timing in terms of like how long the money is going to need to be invested, that makes it harder. So be careful. Marie writes that she's got 400 grand in stocks, no other investment vehicle. Should she put her eggs in more baskets? Yeah. How about yes? I don't understand people who are 100% in stocks. I really don't. I don't get it. I never got 90% in stocks. I'm a huge wimp. Mark, are you a growth investor? You're sort of an 80-20 or a 70-30 guy? Mark's 80-20. Do you know what growth is for me? 60-40. And by the way, I've had it reversed. I'm just not comfortable with risk, and I don't like downside. From the behavioral economists that are out there, what we know is that the enjoyment you have from a market rising, that feeling is not as bad as you feel when the market drops. And I am certainly in that camp. So if that's more like you've just had a really interesting period of time to judge it, actually. How did you feel, through January versus how do you feel now? Do you feel worse? Is the amplification of your feelings, is it worse right now than it was in January? Mark's shaking his head. No, he's cool. You all already know that I feel good. I feel good. Yeah, I love it. I love a good sell-off. You know why else I love a good sell-off? Because I'm still investing. And I want my money to go to work when the market's down. So I just made my retirement plan contribution. I topped it off for last year. And, I was so happy. Cash, I think that the cash went into my account on the Monday. The Dow fell 1,175 points. So just go buy it, buy them. It's a Macy's Day Sale. By the way, Mark, this is the best analogy I heard. Our friend of the radio show, Michael Goodman of Wealthstream Advisors, he says to me on that day, he goes, here's the analogy. 1,175 points is like a 1,000-pound person losing 50 pounds in a day. So it was not a big percentage loss, but it was a big point loss. All right. Okay. Here you go. It's Jill on Money. If you've got a financial question, 855-411-JILL. We'll get you on the air live. And send us an email, askjill@jillonmoney.com. We'll be right back. You're back with Jill on Money. This is the program that takes the mystery out of your financial life. So a couple of mysteries that may be on your mind. How about this? Market sells off. What should I do? I've got good news for you. I have a whole blog post that is addressing that. Just go to jillonmoney.com. Click on the tab that says Read. And under that Read, you'll see Stock Market Plunge. What to do? What a good title that was. Mark says he got inundated with friends of his who said, we're texting him this week. What should I do? What should I do? What should I do? How about a whole lot of nothing? Or maybe something. Maybe you do have to do something. You gotta figure out what money was at risk in the first place. Check out our blog post, Stock Market Plunge, What to Do. Next, probably in the rigmarole of last week, you may have missed this. The Certified Financial Planner Board of Standards, which I love because I am the senior CFP board ambassador. So I am associated with CFPs. I love CFPs. Last month, the CFP board released a second draft of revisions to their standards of conduct that were attached to the Certified Financial Planner mark. And what happened in that draft, they're saying anyone who holds a CFP mark has to act in their client's best interest, whether they're doing financial planning or transacting business. And that's a change because it used to be just financial planning. So check it out. Last week, there was a comment letter by these knuckleheads: Ameriprise Financial, Morgan Stanley Wealth Management, LPL Financial, RBC Wealth Management, Wells Fargo Advisors, Edward Jones, UBS, and AXA Advisors. They said, you shouldn't have harder standards for CFPs. We don't want our CFPs who have to put the best interest of their clients first. If you are not working with someone who is putting your best interest first, you better go onto the website right after we get off the air. We've got it posted. 10 questions to ask a financial professional. Protect yourself. These guys and gals don't want to protect you. We're going to protect you. Jill on Money. We are so delighted. It was a great show. Thanks again to Dan Roberts. Give us a call, 855-411-JILL. Email us, askjill@jillonmoney.com. We'll see you next week. Keep calm and carry on.